Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. Andrew's not live in Times Square. He's got some interesting stuff going on today, and we're going to talk about that in just a little bit. I like the sweater. I like the pocket square, Andrew. Let's take a look at U.S. equity futures at this hour because it's the first thing people want to do when they wake up lately. You never know what you're going to wake up and find.
Well, it's down again.
This morning, the Dow futures are off by 212
They were just
points.
up 200.
The S&P futures are off by 11. The NASDAQ is still indicated up by about 46 points. But blink and you could miss the direction at any point. Yesterday, I think there was a 6% swing for the S&P 500 between the highs and lows of the days. It actually ended down for the first time below 5,000 since April of last year. Comes after, again, those stocks reversed the early gains that we saw in yesterday's session. Ended the day down. The Dow was down by 320 points at the close, and the S&P closed down by more than 1.5%. The NASDAQ was down by more than 2%. Again, you don't know what you're going to get on any of these days. A lot of volatility.
Any of these hours.
Certainty.
Yeah.
We have not heard from China yet, whether there would be a response or not. On Friday, remember, we heard at about 6:15 what their response was. They like to time things before the U.S. market opens, so we are on heightened alert for anything you might be hearing from China today. But take a look at Treasury yields, because this has been pretty confounding. Treasury yields have been climbing pretty rapidly. The 10-year is now sitting at 437. The 2-year is at 380. You've got the 30-year all the way up to 484, and there are a lot of reasons that people are citing for why treasuries might be climbing. One of them is it's the most liquid market. You may have hedge funds or other investors who need to sell what they can to pay off any potential margin calls that are coming, and that's where they might be selling things. Other questions that people have, though, is would China be reconsidering its purchases of treasuries? Other questions as to whether this is a safe flight, that prices have gone down as these yields have gone up, and there are a lot of questions about what this means. And there's a mixed picture in Asia overnight. Japan's Nikkei fell nearly 4%. Markets in Shanghai and Hong Kong rebounded slightly, and South Korea's Kospi was down by 1.75%. And then in Europe right now, where they are actively trading still, markets are in the red. The FTSE's off by about 2.7%. Other markets down by just over 3% for Germany, France, and Italy. And Andrew is joining us from a pretty special place this morning with some special guests who will be joining us as well, Andrew.
Thanks, Becky. We're going to be talking all about these tariffs and what it means for the markets. We're in Kiowa, South Carolina. This is the 4th annual gathering of a global sports Leaders Conference. Is hosted by Bruin Capital and Sportico, but so many of the folks who are involved in sports are right at the center of business, and we're going to have a bunch of huge exclusives with you, exclusive interviews this morning. We're going to talk to George Pine, who is the host at Bruin Capital later this hour. We're also going to be spending some time with Robinhood's CEO, Vlad Tenev, who's been outspoken about tariffs and has been seeing a lot of the flows with retail. We're going to show you an interview with former Secretary of State Anthony Blinken. It's his first TV interview since leaving office. He has sat across from President Xi. He has spent lots of time with our allies, including Japan, which of course is now at the front of the line to negotiate what these tariffs look like. And he's going to talk to us about what this all means and how it all could go in terms of gaming out these negotiations. And then we're going to speak with Apollo CEO Mark Rowan, perhaps one of the most influential people in the world of finance in terms of credit, private equity, and everything else. So we're going to get, I think, some real perspective. He, of course, was a supporter of President Trump's and has a lot of also provocative views on tariffs. I've gotten a whole lot of color even just down here. Ken Griffin from Citadel is on his way here. I ran into Mark Cuban, who is here. And then there's all sorts of other folks just in and about. A-Rod is at this conference. I spent some time last night with Adam Silver, of course, at the NBA. They have a huge presence in China. Ryan Reynolds, the actor and increasingly entrepreneur who has all sorts of business around the world. So these tariffs are front and center, and sports may be the topic, but really I think the topic is tariffs and to some degree soft power, by the way. We'll talk about that as well.
And Apollo shares have been one of the ones that have been hit pretty hard, down 18.5% just over the last 5 days. So he can talk to us about, what that whipsaw has been, too.
Absolutely. And I think we're going to have to get into, I mean, I think there's a larger conversation about the world of private credit, and a lot of folks concerned or questioning sort of what happens. Also, what does the Fed do in the face of all of this, depending on where you think the equity markets go, and not just the equity markets, but can this spill over into other parts of the financial system?
Probably nothing, unless something looks like it's starting to break in the financial workings.
Well, and that's the question, though. But do you, and how much do you let it go? You know, would you let something break? Right.
Well,
I mean, that actually is a very fundamental question. All of this.
The Bank of England saying this morning that there are some hedge funds that are liquidating some things, some positions as a result, but they think everything's still moving in an orderly process at this point. But that's obviously the place that people are looking if there's any forced selling that leads to other financial contagion.
Yeah, well, at this point, it's on again, off again. Are we negotiating? Are we not negotiating?
Yeah.
And that spilled out into social media yesterday. Spectacularly, the two factions at the White House. You've got one who's an actual, I guess, someone that Trump could fire. You're talking about Navarro or Ron Vera, whatever you want to call him. And a lot of the comments he made the other day about Elon Musk not having a car company but a car assembler, that got Elon's dander up. So he was, you know, with his 204 million followers, that I was on the stupid train. So I'm still getting, I can't even open Twitter at this point. But the Wall Street Journal says, you know, they called it boys will be boys. They actually asked Carolyn Levitt about it yesterday.
Carolyn Levitt said, yeah.
But the Wall Street Journal said it's important to look at this because Trump is getting buffeted by the Navarro ultra MAGA crowd, almost neocon, versus Elon Musk, who can't be fired at this point because he's not an employee. And the Journal is saying Musk is saying things that Trump needs to hear, that he's not hearing from. And so every time, you know, we had Washington Post, stocks jumped front page in the first hour of trading after Treasury Secretary Scott Bessent told CNBC that there were 70 countries negotiating.
Right.
Next thing you know, though, you get the China news, which is 500 billion that they export. That's a real, you know, that's not one of these small countries that we're doing a deal with out of the 70. That just like wipes all the good sentiment got wiped away immediately with 104% tariffs on China.
If you're talking about a trade war that is, that's an unretractable trade war once you ratchet things up, and that could be the path that we're headed on. Now, China has not said anything about this latest move to push those tariffs above 104%, but the day is young.
Well, how many great deals with the other 70 offset 104, something that it seems like it's not going to be settled anytime soon. And, you know, Trump likes to think that he's Machiavellian, and there's another piece that talks about what happens when people stop being afraid of Donald Trump. What if China, you know, calls his bluff and stays, even though they're going to have trouble because they do need the United States. But I don't think President Xi is a pushover, so I don't know how both sides save face here.
I think China just looks at things differently. It's not a party that needs to be reelected. It is not a party that's necessarily going to be concerned with short-term pain.
We've seen
they have a much longer term. They don't mind hurting their citizens for a longer period of time.
But let me just relay a conversation I had with one COO last night that does a whole lot of business in China and knows President Xi, and made one observation that surprised me, which is they're more patient, and because of that patience, actually, it's possible that they could, quote unquote, be willing to throw a bone to a President Trump, say, you know what, this guy's only here for 3 years. We'll give him something that he can have so he can look like he wins right now, and we'll get it back, and we'll get it back more down the line. Like that, I mean, that's one view of it. The other patient view is
the other idea of saving face. Yeah, and the idea of saving face. Both of these leaders don't want to look like they are stepping down and saying that they concede to the other, which is part of the issue too. Now, Donald Trump, in terms of what he thinks about this, he was speaking yesterday and said, "Hey, we're bringing $2 billion a day in these tariffs." So he's kind of trumpeting the idea that,
so to speak,
right.
But it's not from China. Or it's from us. That's where the $2 billion is.
By the way,
that's where the $2 billion is coming from.
Us. And then also subtract 10% from the stock market and the trillions of dollars that have been lost in the past 2 weeks.
Nothing's been,
The math doesn't ever
been
add.
lost yet.
Those are paper losses,
Yeah,
but it is a
hasn't-
sign of
hasn't
confidence
been
because
lost yet.
everything runs on confidence, and it is a sign of lost confidence, and that's much harder to measure. I mean, all this money went to money heaven, I guess, but the loss of confidence, and that is a measure of loss of confidence, is pretty extreme, and you don't know exactly how that plays out from here.
We're going to talk about something we've been going back for. I can't believe, there's a lot of things happening that I just think are beyond the pale. And if they let if they raise the top rate, when 95% of U.S. companies are not C Corp, they're pass-throughs, 95%. So only 5% do not pay at the personal or, use the corporate tax rate. And so if you raise that anyway, now he's saying that it's possible because he's got all these other crazy ideas that he sort of says off the cuff, tips, car loans, overtime, comes up with them on a plane ride, and he's going to go back on his 2017, the core of what happened in 2017. I don't know if he realizes it's pass-throughs, that it's 95% of small and medium, even large companies, some are not C Corp. President Trump speaking at the National Republican Congressional Committee dinner last night, just hours before his new tariffs took effect. Here's what he said about negotiating power with America's trading partners.
I do think that the war with the world, which is not a war at all, because they're all coming here. Japan is coming here as we speak. They're in a plane flying, lots of them, all tough negotiators. But things that people wouldn't have given us 2 years ago, wouldn't have even thought of it 2 years ago, 3 years ago, 5 years ago, 7, they're giving us everything.
Pharmaceuticals have so far been exempt from new tariffs, but President Trump said that will soon come to an end.
We're going to be announcing very shortly a major tariff on pharmaceuticals, and when they hear that, they will leave China, they will leave other places because they have to sell. Most of their product is sold here. And they're going to be opening up their plants all over the place in our country. We're going to be announcing that, so that's breaking news. Ladies and gentlemen, we have breaking news.
Global pharma stocks, take a quick look, and then we'll talk about what I was just talking about. Because Robert Frank, I was watching his report from earlier, we're talking about a huge tax bill coming up over time, which he's got some facts and figures about what it would add to
give all the
interest rates, to give all those cuts.
Yeah.
And Robert said it's being broached at the highest levels of the Trump administration. Going back to 39.6 is being broached.
There are people who are, Republicans who had looked at this and said, okay, if you can raise taxes and pay down the deficit, that would be a different situation. But this is basically
well, they got to use the tariff money. They're supposed to use the tariff money to pay for all this stuff.
Well, they're going to use the tariff money to pay the farmers and others who are getting hurt by this, who are seeing the retaliation. So, there's only so much money to go around. There's only so many things you can do with it. And if you widen the deficit while you're doing all of this, then
you can get so populist that you turn a Republican into a Democrat. You can, and if that's what he thinks we elected, I'm not really sure that that's the case.
Well, there are also situations where Senators Elizabeth Warren and Senator Bernie Sanders have agreed with him on some of these things that he's doing, and we have Senator Warren joining us a little later today. She's not a fan of the tariffs and the way they're being implemented right now.
But not
likes them used in targeted manners, not in these ways. But they do agree on some issues. Some of the things he's talked about. She's said in the past that she'd be with him 100% if he would cap what you can charge on credit card fees and other things along those lines.
Reading, I was trying to figure out how I was going to challenge her, and I can't believe I was nodding to what I was reading. It's a topsy-turvy world.
Anyway, joining us right now for a closer look at the markets is Ryan Dietrich. He is Chief Market Strategist at Carson Group. Ryan, your thoughts this morning as we watch these volatile markets. Would you step in at these points, or is the volatility so much that you're just kind of sitting back and waiting to see how this plays out?
Yeah, good morning, everyone, and thanks for having me back. And Joe, you and Senator Warren agreeing on things. I'm looking forward to watching that a little bit. That'll be something.
I know. It's the antimatter meeting matter. The universe is supposed to end.
Yes.
Don't cross the streams.
Yeah. There's a lot of things going on, right? And I think to answer this question, what do we know, right? What do we know? We know more than 80% of the stocks in the S&P 500 just made a 20-day low. That is consistent with pretty close to major lows. We just saw that big spike up above 50. Once again, you're in the ballpark of lows. But you've had so many good guests talk about things. I think, what can I talk about that no one's really mentioned on the network yet? Here's something for you. Yesterday, the S&P was up 4% at the peak, closed down at least 1%. That's never happened in history, at least using intraday data back to 1978. But taking that one step further, 3 days in a row, the S&P 500 has closed at least 3% off the intraday high. So that's obviously weakness as the day goes on. We get it. 2 times in recent history, we've seen that. July of 2003 and then August of 2015. Both of those times obviously were very volatile, but those were near major lows. And when you look at August of 2015, that was the low, right? We saw that 3 days in a row of weakness off the highs. Up 6% 2 days later, and then you're kind of off to the races. Now, I get it. There's lots of other stuff we can talk about, but I think to answer the question, we're in the ballpark here of hopefully some type of a pretty significant tactical low.
So you are buying at this point? Am I hearing that you're putting your money where your mouth is?
Mm-hmm. No, we're overweight equities, and we have been. Now, I get it. These last 11, 12 days have not been fun.
So you're praying.
So well, I don't know if we're praying. Let's say we're not praying, but I mean, yeah, exactly. We're still there. Now, one of the other things that's really fascinating, I know you've got some credit experts coming up later today, so I can't wait to hear those conversations. But when you look at high yield bonds, yes, they've been down a lot over the last week since obviously Liberation Day. But for the year, high-yield bonds are still only down about 3.5%, with the S&P down 15%. I mean, we're still encouraged by the fact that they've hung in there. Credit
spreads,
market
hasn't collapsed, right?
It hasn't collapsed, exactly. And look at credit spreads right now. Of course, they're higher the last 5 days.
Yeah.
But credit spreads, look at triple B spreads, high yield, all across the spectrum. Still not anywhere near what we were seeing in 22. Now, again, that can change quickly, but those are some little minor positives, I think, and a sea of negativity. And honestly, you look at the 10-year yield. I know you guys talked about that before it came on, up over 450 when we all went to sleep last night, and you wake up and that's off of those highs. Is China dumping? Is it a global liquidity event? I mean, it's maybe a little bit of all those things. I'll tell you this, the yuan, it's not surging, right? I mean, so it's actually lower. So that maybe means China's not just dumping like maybe zero.
Maybe they haven't completely manipulated the currency to this point.
Exactly.
Look, I hear what you're saying, and I think a lot of people would like to hear that message of hope, particularly if they're long. What happens if China responds this morning and says that they are taking extraordinary measures? If it's not raising tariffs, maybe it's targeting American companies that are based there. There's a lot of things they could do to retaliate. If they do anything to ratchet things up, then what?
Yeah, it's probably more of the same what we've been seeing, right? The volatility, maybe late day weakness. Now, like you said, and we've been hearing 70 countries are talking to the White House. Maybe we get some other good news.
You could hear some good news that
maybe negates that. And one thing also is really interesting. We're really close to a bear market on a closing basis, as everyone knows, down 20% from the February 19th peak. I went back to World War II, 11 bear markets. If you simply looked at the S&P the day you move into a bear market, so we're not there yet, could happen today. 1 year later, the S&P is up a median of 23%. Only twice were you down a lot a year after you move into a bear market, 73, 74, and then the great financial crisis. So if you don't think we're in another situation like that, and honestly, we don't. We get it. Things are worse than they were. Right. But those are something to think about for those longer-term investors that, a month from now, who knows what's going to happen. But a year from now, we're optimistic. Go ahead, Joe.
Your poor clients still won't be back to even.
Well, it depends where you're invested, I guess, right? I mean, if you blindly look at that.
If you lose 20 and get back 23, you're not even.
If you start today, you're right. But I mean, we have been over at equities for a while, and I get what you're saying there. But we're also diversified. I mean, I get it. Bonds are up 1%.
If you start today, if you held at the top and it goes down 20 and then it goes back up 23, you're not even close to hold.
Yeah, but again, well, that's true.
Unless
but again,
unless you buy today. Unless you buy today.
Cost averaging.
And we've been buying before today, I guess, is what I'm trying to say there. But I hear exactly what you're saying. That's why you're diversified. I mean, look at gold today. Gold's up 2% again, right? So there's still some things that are helping.
Throw some good money at bad, Ryan. Let's go. Let's get going.
Hey, Ryan, thank you for joining us today. It is nice to hear a few positive thoughts on what's standing around us, but we appreciate it.
I appreciate it. Thank you, guys. Good morning. Thank you.
It was a Saturday Night Live thing, too. Wasn't it positive?
Oh, it's the You're Beautiful? And
no, they were positive. No, it
was Positive Thoughts with Stewart. What was the
Daily Affirmation. I don't know.
Wait, it was the senator who did that.
On Saturday Night Live?
Yeah, it was Al.
Oh my God.
Yeah.
That was
Al
before he
Franken.
was.
Al Franken.
Al
Yeah.
Franken, right.
Yeah, before
We
he
got a
was
lot
this-
more coming up.
Thanks,
a little
man.
bit of humor. I don't know, maybe a little humor. But President Trump and House Speaker Johnson whipping votes for the GOP's budget plan yesterday. Up next, Robert Frank's got a closer look at the rising costs of that bill that have got a lot of deficit hawks on the fence. They're a beautiful live shot of the Capitol this morning. And a programming note, tomorrow at 8:30 a.m., a big exclusive interview, especially in this moment right now, with the CEO of Amazon, Andy Jassy. I'm headed from Kiowa to Seattle right after this show to get to him. We're going to discuss the state of the consumer, the impact of tariffs, artificial intelligence, and so much more. Squawk Box coming right back.
Swiss luxury watchmaker Omega did send their Speedmaster Professional to the moon in 1969. More than half a century later, Omega is partnering with Swiss startup ClearSpace to support a world-first initiative, cleaning up debris from space.
For 60 years, we've been putting satellites into orbit, and we essentially don't remove them.
One of these big pillars of our DNA is of course, the space odyssey. Looking at this, Omega always been very much involved in what's happening in the sky. You know, in 1962, we had the first ever Omega in space by Wally Schirra, his own Speedmaster.
Most of our economy depends on space infrastructure. We cannot live without them anymore. So what we need to do is create an environment that is just self-sustaining. We don't yet have the exact launch date. It's probably going to be more around 2028.
Sponsored by Squawk on the Street, CNBC.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wished we could just follow the markets and talk. My ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
How much would you pay for luxury travel? A week's stay costs almost $270,000.
It's on the list for $30,000.
From secret getaways to one-of-a-kind deluxe experiences and bespoke services all the way.
The next evolution of the luxury traveler is experiences. Experiences really that money can't buy.
This is First Class, only on CNBC.
Good money.
Everything seemed legit until it wasn't.
Good times
The lavish lifestyle, the houses that they're used to.
is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fought for them.
I believe in getting justice.
American Greed on CNBC.
Want to jumpstart your side hustle? Learn the skills to earn passive income online with CNBC Make It's new online course. Expert advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
Tax plan rising with every new proposal from Republican lawmakers. Robert Frank is going to tell us why the bond market may be the biggest risk to the president's tax bill.
Good morning, Joe. Well, the potential costs of the new tax bill, they are soaring from about $4 trillion to over $8 trillion. Extending the 2017 tax cuts would cost about $4.5 to $5 trillion, just that piece of it over the next 10 years. You add to that President Trump's new plan, so no tax on Social Security, that's $1.4 trillion. No taxes on overtime pay, that's about $900 billion. No taxes on tips, that could be anywhere from $100 to $500 billion. And then raising the SALT cap from $10,000 to $25,000, that's billions more. You add it all up, that would be about $7 to $8 trillion. And that money not only would raise the debt, but also the interest costs on that debt. So without an offset in cost, The Peterson Institute estimates that the interest on the debt would raise that total to over $9 trillion. Now, to fund all that, the government's going to need to issue more debt, and that more supply of debt could bring higher rates. More debt means bond investors will also demand higher yields to take that added risk. You boil it all down, the CBO estimates that every 1% increase in debt to GDP adds 2 basis points to long-term rates. So debt to GDP expected to rise 34 basis points over the next 10 years as a result of this tax plan. So that would add an implied 68 basis points in higher rates. We've seen these rates blow out over the past 24 hours. Some of that may be China selling, some of it may be the hedge funds. I think your point earlier is spot on. But I think also as the deficit hawks in the House are losing ground in this battle over reducing the cost of this tax plan, I think bond investors are also clearly paying attention to that.
I mean, that's the opposite of a virtuous cycle.
Yeah, because more debt, higher yields increases the cost of servicing that debt, and then it just starts to spiral. Exactly, that's what people are worried about.
So the thing that you hear President Trump or his acolytes, in terms of talking about the first term was the 2017 Tax Act. So one of the basic tenets, and we've talked about it before, that if you cut taxes, you're going to get more revenue from growth. That's the whole idea. So if you heard Trump himself say we might let the top rate go back to 39.6?
No, he said it, according to 2 reports now, at a meeting with Republicans. Lindsey Graham said, okay, you say everything's on the table. Would you consider raising rates on high earners? Not the wealthy, but high earners.
That'd be the top
distinction.
1%, yeah.
And he apparently said, yeah, I consider that. I consider everything. Remember, in 2016 on the campaign trail, he said, I think we need to raise rates on the high earners. It's time. Remember, he said that. And remember, the 39.6 to 37 that was part of 2017, that only became because there was a big reception at Mar-a-Lago right after they announced SALT was going to be part of the plan. And all his New York friends were at that reception and say, you cannot do this without some kind of offset on top rates. So it was only because Gary Cohn, Larry Kudlow, other people around him said, if you're going to kill people with SALT, especially at the high end, you've got to have an offset. It was at the last minute they did that. I would not be surprised, given how politically popular it is to raise rates on the high earners. Plus, Trump and his friends, they don't pay ordinary income rates.
Right.
It's only chumps who pay ordinary income rates.
They've got all the partnerships.
So they've got the partnerships, they've got real estate depreciation, they've got all this fun stuff.
That's philosophically going against everything that they... That was the reason. The reason we're doing this is because it will generate more and it will cause growth.
Populist impulses are going against what traditional Republicans have done.
Exactly.
But more and more.
Andrew, yes.
I'm curious, we're going to have Elizabeth Warren on the broadcast a little bit later.
Yeah.
What do you think most Democrats think of this program? And not just Elizabeth Warren. Do you think the Democrats across the board would go along with it if there was no change in the SALT program?
I think there's a small faction of Democrats that are going to block anything that doesn't change SALT. Bringing it up to 25,000, I think, will appease most of them. But look, this is, as Becky just mentioned, this is a very populist tax plan. Tips, Social Security, overtime. These are, blue-collar workers. This is not a sort of job creation, job creator-focused tax plan that we are used to hearing from Republicans.
No.
And I
you
think
get populist enough, you turn into a Democrat. That's what he said. You do.
And remember, Biden's plan was saying we're going to extend all the tax cuts for anyone who earns less than $400,000. Right. Effectively, this is a redistribution that Trump is talking about from the top to the bottom. And I think a lot of Democrats would like it. They're not going to vote for it, but they're going to like it.
Robert, and they used to brag, and Trump has bragged repeatedly, everybody got a tax cut. Biggest tax cut in history. Everybody got a tax cut. But you have pointed out that because Willie Sutton, where the money is, a lot of the tax cuts did accrue to, they got, I guess, more because they're paying more. Some people don't pay anything, so it's hard to But they'd go back on that completely and say, never mind. We didn't mean anything we said about trying to spur growth, and that's how we're going to deal with the deficit.
If you have to deal with I don't even know if you deal with the deficit.
Yeah, but they said it was growth.
For the rest, but if you pay for the rest of this, you have to go where the money is too. And this is
But growth was going to be, that's all we have. We're no way we're tackling the deficit.
You know the top 10% pay vast majority of the tax, more than 3/4 of the taxes. So this will make it even more progressive if they raise the top rate.
But the tariffs are the opposite of that. The tariffs are basically
the tariffs are regressive. It's the most regressive.
And hurt the people at the bottom.
They obviously didn't believe the story that they were telling us, that it's going to come back through growth, and the revenue that we're losing from the nominal rate is going to spur business activity, and so they, oh, never mind. We're going to go and do the
Well, again, I think that it could still do that. I mean, tariffs are a whole other issue, but on its own, I don't know that going from 37 to 39.6 will destroy. You know, the corporate rate coming down was good job. The corporate rate
95% are small businesses.
Immediate deduction of capital expenditures. Those are the things that really drove growth.
So only 5% of companies are C corps of businesses.
So what you're saying is that
I'm just
small
saying
businesses are going to
be
pay
affected.
That 37 to 39.6.
They will, small and medium, even some large companies aren't C corp. And they pay at the level.
You're only C corp if you're issuing stock.
Right. No, pass-throughs, LLCs,
and you got a lot of money for
partnerships. Those are the majority of taxpayers right now.
Robert, we wish you were here all day, every day.
Literally,
this is amazing to have your vast knowledge on these issues. We love having you here.
Thank you. Good to see you.
Another brick in the wall.
Meantime, we got some breaking news to bring you right now. I want to get straight over to Phil LeBeau because Delta Airlines just reporting, and he's got the numbers. Phil.
Andrew, take a look at shares of Delta. This is a beat on lowered guidance. Remember, the company warned about Q1 results last month. They cut their guidance. Well, they did beat on the renewed guidance, earning 46 cents a share versus the estimate. And again, remember, these have been brought down substantially over the last couple of months of 38 cents a share. Revenue coming in slightly below expectations at $2.98 billion. Q1 margin of 4.6%. The street was expecting 4.3%. Revenue per seat mile is down 2% compared to Q1 of last year. Free cash flow of $1.28 billion, below the $1.37 billion in the first quarter of last year. And here's the part that's going to be the reason you see shares of Delta under pressure. Delta is saying that the outlook, and these are their words, outlook says the growth has largely stalled. And that's reflected in the guidance for the second quarter and the rest of this year. Q2 EPS guidance of $1.70 to $2.30. The street going into this morning was at $2.30. Operating margin of 11 to 14%. The street was at 14.6%. Q2 revenue could be negative 2% to positive 2%. The street's expecting 1.9%. As you can see, everything is below what the street is expecting here. Second half capacity, flat is what Delta is expecting. Previously, it was planning on capacity growth of 3 to 4% in the second half of this year, and it is also pulling its guidance for the full year. I want you to think about this. Just a couple of months ago, we were here in Atlanta. We talked with Ed Bastian. He was forecasting record profits for 2025. Now they are pulling their guidance largely because of the uncertainty in the economy, what they are noticing with their forward bookings, what they're noticing in terms of demand going into the summer, both corporate as well as leisure. We'll talk with Ed Bastian about this, and more importantly about what he's hearing from other CEOs, from other executives in terms of the economy. This is really our first snapshot of the consumer since the tariff trade wars really exploded a couple of weeks ago. That's coming up a little after 7 o'clock. Guys, back to you.
Hey, Phil, very quickly, watching the reaction in the stock, this is all bad news, worse than the street was expecting, but the street kind of knew that this was coming. These stocks have sold off pretty significantly. The last I saw, stock was indicated a little higher, 35.88. Okay, it's hard to say exactly where it's going to open. It closed at 35.88 yesterday.
100% right, Becky.
But these stocks have sold off because everybody knows that there's some big problems and that these are going to be the canary in the coal mine, I think, is what Larry Fink was saying, that he'd heard from a lot of these airlines. One of them described themselves as the canary in the coal mine, and the canary is sick. Stock market reaction for all of these stocks reflects that over the last week.
And it's not the numbers, certainly not the numbers for the first quarter, though that reflects the uncertainty that really kicked in the month of March.
Right.
But it's the guidance, and it's the uncertainty. We'll talk to Ed Bastian about this. I've had discussions with Delta executives and other executives in other airlines. Everybody says the same thing. We cannot forecast an expectation of growth or limited growth given what we're seeing with booking trends. And so this is the first chance to hear from a CEO who can talk about that.
Phil, I'm confused on one component part of this is because we had a conversation, you and I and our audience, about a week and a half ago. We were talking about Canada, if you remember, and there were a whole bunch of numbers that we were talking about in terms of whether Canadians were still flying to the U.S., whether they weren't flying. There was a lot of speculation that they weren't going to be flying. I think some of the numbers that you had suggested actually that was not the case. Is that the case?
We'll find out when we talk with Ed. We'll get a more, granular view of what's happening with travel, Canada to the U.S., Mexico to the U.S. I can tell you that a couple of weeks ago, the industry, Andrew, and that's when we did that report, there had been all of these stories out that nobody from Canada is going to come to the United States. Well, the schedules that were put out, and that's what we based the report on, the capacity showed there was only a slight decline in the number of planned flights from January to March, and that's when you were looking at April and May bookings. That may have changed within the last few weeks, that you really start to see a drawdown in traffic. But we'll talk with him after the top of the hour about that.
Okay, and we're going to look forward to that interview with Ed Bastian. Phil, we're looking forward to you bringing us that, of course. Before we head to a break, though, take a quick look at the futures right now because taking another leg down as we've been speaking this morning. The Dow now off about 433 points. The NASDAQ looking to open down about 42 points, and the S&P 500 looking to open off about 38 points. We got a lot more coming up on the broadcast, a huge number of interviews to try to explain what is going on around us. Squawk Box returns after this.
Before I go out, for me, the more relaxed I can be, the better. As soon as I try and create that situation where I'm tense, I'm like, okay, something big's about to happen, I need to do this. That's when I just don't perform to the level that I need to. And maybe that works differently for other people, and other people, they go and have a kick with a football, or they go do some boxing and they get hyped up. You see their warm-ups, they're getting sweaty, and I'm just lying there having a little nap.
I can't believe that landed. What, you can have a nap before?
I'll have a nap. Yeah, it's like the lower my heart rate, the better I'm gonna do. Because when I get in the car, as soon as the helmet goes on, you're in your own world. It's me, it's my car, everything's disappeared, and it's just you have to focus on what's ahead of you. I'm still nervous, I'm still crazy nervous before races. I'm an overthinker, so I think of a lot of stuff. So the more I can almost calm myself down and just think, okay, all I got to focus on is the start. Then after the start, the rest will happen.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Commit to energy. Focus on innovation. Discover the next growth opportunities. Climate technology. All you need to know to invest in the future. The ultimate source. CNBC.com/climate.
Wow, that's exciting. People are not afraid to relax. Oh my God. So this is my family's go-to spot, and it's always so good. My name is Chad Kubanoff. I've been living in Ho Chi Minh City for close to a decade now. This really is like the steak and eggs in Vietnam. I love Vietnamese cuisine because it crosses lines all the time. Like, is this a salad? Is this a noodle bowl? It's somewhere in between, and I think that's really exciting when you see dishes like that. I was reluctant to show you this spot because I love it so much and I don't want it to get any busier. And it's so cool in Ho Chi Minh City because there's so many different styles of coffee shops, so no matter what you're into, there's something for you. If you want something that's a little more chill, there's absolutely that. Or you want something that has a lot of koi fish, they have that as well. We can't be in Saigon without talking about Cam Tam, or broken rice, which is like the dish of this city. After 10 years of living here, my palate has completely changed as a cook and as an eater. I love this kind of eating. This is what made me fall in love with Vietnam. Welcome to my neighborhood. Let me show you a few spots I love to go to in my downtime.
Coming up much more on the move, lower, and it's gotten worse. Well, actually, it's gotten better and more. We were down over 450 a second ago, but now 340
again because
where is it? It's got to be 50, I would think. As we head to break,
45.
I can tell you quickly. As we head to break, check out the market cap of Microsoft and Apple as of yesterday. Apple dipped below Microsoft, giving up the crown as the most. They've been jockeying for the most.
Apple's had its biggest 4-day decline since 2008. Over the last 4 days, it was down 19% in 3 days. It was down again yesterday, and that was the biggest drop in its
we could just probably. This is like a basketball game. Leads change hands like 10 times, but the VIX is 50, closed at 51.
Wow.
It's bidding 51, asking 52.40. Wow. Apple's pre-market gains, though, today bringing those companies back to neck and neck. Squawk Box will be right back.
Leaders of business and tech talk AI. Name another industry that has a $10 trillion total addressable market. That's why everybody should be excited. And its impact on the way we'll live and work.
To make sure that we are skilling up everyone is something we owe to society.
Highlights from Converge Live only on CNBC.
Sponsored by
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
CNBC meets David Beckham.
For a long time, people wanted me to do the life documentary, but I'm not very good at opening up. The things that I've been through in the past, I've kind of put in a box, locked it up, and thought I'm never going to have to talk about it again. And I was happy with that. But I didn't realize how important it was for me to actually talk about this stuff. So I opened up and talked about things that I'd never spoke about before, like, injuries and worries and things that went on throughout my career, the sending off and how that made me feel.
When you talk about the sending off and the reaction to it, when you look back, what kind of mental resilience?
Well, I'm really glad social media wasn't around back then because it was bad enough then. It was challenging, and when I look back at some of the footage, some of the archive stuff I'd never seen before, and it was hard to watch, and I get emotional talking about it.
Welcome back to Squawk Box. We are in Kiowa Island this morning. Sports leaders from around the globe all here. Joining us right now is the host of this year's event, George Pine, Bruin Capital founder and CEO, and it's great to see you. I want to talk sports, but the truth is I want to talk about tariffs, and I want to talk about sports in the context of soft power, because we were talking to Anthony Blinken last night, and we're going to have some of our interview on this broadcast a little bit later. But as you're thinking about tariffs, everybody here, that's all anybody wants to talk about. What does it mean to the sports business?
Well, instability and unpredictability is not good for any business. Sports is the same. So it's making it choppy. Sports is a consumer business, impacts consumers, impacts the whole industry. So everybody's on their toes right now.
And when you think about different leagues, I know Adam Silver's here. Obviously, they have a huge business in China. I mean, how much do you think about the international piece of the sports industry?
Well, we're in 24 countries, and we're sports exclusively, so we feel it a lot. People are asking us questions. We're answering questions we've never had before. There's a lot of uncertainty, particularly as an American-based company. So we're navigating things we haven't navigated before, but we're getting through them.
What about merch, right? I mean, a huge part of the sports industry is merch. You were the CFO of IMG back in the day. The merch was a huge piece of it. What is it? How do you see all this playing itself out?
Well, like everybody else, we're watching. We don't know. I mean, we own a simulator company. A lot of the parts come from around the world. Our prices are going up 40%. We have a company that lights the pitch around the world. They have to import stuff to the U.S. We don't know what that means. So it creates a lot of uncertainty in the supply chains and in the ability to execute. And sports is no different.
What do you make of the branding issue, though? Which is to say, I think one of the things that I was talking to Blinken about was this concept of soft power that we have presented, whether it's basketball or baseball or football around the world. It's been a soft power, and that the rest of the world has loved America in large part because of our sports. Do you think that's changed?
Well, it's a lot in a short amount of time, but we're going against the backdrop of the FIFA Club World Championships this year, the World Cup next year, the Olympics in 2028. So all of that logistical planning is going on right now, so that's creating another layer of uncertainty. So that's a negative. The positive is, the sports has the potential of bringing people together, bringing the world together, and the world's coming together in 3 big events in the next 3 years.
A lot of sports, including college sports, is becoming privatized. And a lot of the folks, Apollo, we're going to talk to Mark Rowan here later. They're in obviously the world of private credit, but a lot of even the credit folks are now in sports. Everybody has gotten into sports, but what do you think all of this uncertainty does to valuations, does to the kind of deals that are in the mix right now? I know the Celtics deal just got done, sort of. It's not done. But how do you see all of that playing out?
Well, I think, sports has been very durable when you go through the economic crisis and other dot-com bubbles. Sports has held up real well, so I think that will remain the same, that it's a safe haven for investment. But, of course, investment's going to slow down as people retreat a bit. Sports will probably be impacted by that, but I don't think the valuations will change very much. And I think, again, when you're looking for a flight to safety, sports historically has been pretty safe.
What do you think about, so obviously there's the big NBA deals and the NFL deals and some the majors, right? And then there's all of these other sports that are emerging. And I'm not talking about just women's sports. I'm talking about, drone
sailing,
drone racing, all of this other stuff, because this is supposed to be what people want to watch live. It's the only thing that people want to watch live.
Right.
Do you think that those valuations hold up?
Well, if capital becomes constrained, new products, new offerings are going to be impacted. These early stage sports are no different than any other new business. So yes, if people pull back from investing, sports will be impacted to some degree, especially new and emerging sports.
What is the most interesting new sport that you're focused on?
I think I kind of like the sailing, to be honest with you. Those boats are pretty cool. It's global. I think it's very interesting.
George, thank you for having us. This is a great event that you put on, and it's unbelievable that you've been able to collect all of these different people from all sorts of walks of life.
Well, thank you
for
coming.
So
we love hosting you guys.
We appreciate it. Thank you very much. Becky, back to you.
Andrew, the conversation's fascinating, and the backdrop is beautiful with the sun coming up. Looks like okay.
The sun is coming up. It's beautiful.
Don't worry. The sun's coming up no matter what the markets look like this morning. Anyway, when we come back, the IRS is about to lose its third chief since the start of the year. We've got the details on that next. Squawk Box, we'll be right back.
One Partnership is bringing technology and modern farming together to advance agriculture and feed a nation.
We are starting with an automation platform. So a system which is controlling relevant machines, processes.
This is our prototype for the precision nutrient injector that interfaces with the Siemens platform that we're building. We're able to store over 100 different types of recipes. And on demand, the machine will actually mix it up and then deliver it to any go bids.
It is in the same moment giving remotely access to Artisan Green at any point of time. They can see what is the status, what is their energy consumption, what is their water consumption.
The Energy Manager module from Siemens allows us to monitor the equipment, and with that we're able to make sure that the equipment's running at its 100% efficacy, and as a result, electricity costs that way.
Sponsored by
Scott Wapner from the NYSE. Closing bell, CNBC.
When we come back, former DOJ antitrust chief Jonathan Kanter will join us. And by the way, stock futures, they've been volatile over the last hour. Right now, the Dow futures are still down by about 160 points, not the 440
S&P is surging.
we're looking at. S&P is up by 1 point. The NASDAQ is indicated up by close to triple digits. Again, if you don't like what you're seeing, wait. It will change, just like the weather. It's been fast and frequent. Don't go anywhere, but we will. We'll be right back.
CNBC. Live ambitiously.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
For me, ambition and passion go together. One